Indian Bank has given a good set of number in this financial year, Q4 and financial year ending FY24-25, marked by robust growth in profitability, improved asset quality, and good momentum in business, with good traction seen in RAM sector. For the first time, Indian Bank has crossed 13 lakh crore of business, and also for the first time, profit after tax has crossed 10,000 crore. It is 10,900 approximately. And one more very robust number I will like to share with you. SMA, which is we see the stress in the book, which was at 15.59% during at the end of the financial year FY24. It has come down to 8.06%, which is almost half of the earlier number. So it is a really remarkable achievement bank has done, enabled by the technology and dedicated workforce. Our continued focus on recovery and curtailing on slippage has led to significant improvement in asset quality, with a strong recovery contributing to a sharp reduction in NPA. As we step into the new fiscal year, our strategic priority will be to further strengthen our presence in potential centers and continued thrust on high growth sectors like MSME and retail. And with this, I will present numbers in front of you. As you see, as I've already briefed, we have crossed business figure of 13.25 lakh crore with a growth of 8.50%. Deposit has grown by 7%, and total business figure is 7.37 lakh crore. Advances has grown by 10% with a figure of 5.88 lakh crore. CASA, we have been able to maintain CASA of 40%, and QoQ growth was 5% in CASA, and saving fund it was 4%, and overall current was 11%. CD ratio we have been able to maintain at 79.79%, which is a healthy number. Similarly, RAM, as I told you, RAM also we have crossed figure of 3.5 lakh crore with a growth of 13%. Retail contribution, retail grew at 14%, agriculture grew at 14%, and also MSME grew at 12%. Asset quality, which is the strength of the Indian Bank, asset quality as seen in the numbers, gross NPA is at 3.09%, net NPA 0.19%, PCR at 98.10%. Here I will like to add, we do some technical write-off. Technical write-off number last year to this year almost half. So without even technical write-off, we have been able to reduce our gross NPA and net NPA. There is a cost of deposit has come down by 8 basis point for the quarter. However, it has gone up for the year ending for the whole year by 24 basis point. Yield on advances, as we all are aware, there was 2 repo rate cuts. That's why yield on advances has come up by 28 basis point. However, year on year it has grown by 3 basis point. Yield on advances investment has grown by 37 basis point year on year and by 11 basis point quarter. NIM S because of the 2 repo cut and cost of deposit remain at elevated level. There is decline in the NIM by 9 basis point for the quarter and 3 basis point for the year. Return on asset, we have been consistently maintaining return on asset of 1.3, more than 1.30 since last 3 quarters. This quarter also we have been able to maintain ROA of 1.37%, and for year it is 1.32%. Net interest income has grown by 6%, although there is a marginal decline of in this quarter, as I told, because of the passing on that rate cut to our customers. We have passed on the benefit of the rate cut to our customers. Operating profit has grown by 17% QoQ and 13% YoY. Profit before tax has grown by 38% QoQ and 35% YoY. Net profit has grown by 32% YoY, QoQ and by 35% YoY. Return on equity we have been able to maintain at 21%, which is a healthy number. Thank you. Next. Numbers I already discussed. Business we have crossed the 13 lakh crore. Profit we have been able to go back. Profit, as I discussed already, we have this time we have been able to cross at 10,000 number for the first time. Net interest income also there is a growth, and absolute number it was 25,176. CRAR, I will like to discuss CRAR. CRAR is 17.94% overall, which is a very healthy number, and within this CET, Common Equity Tier 1, is around 15.36%. RAM portfolio is at 3.5%. RAM share maintained, we have been able to maintain at 64.3%. Asset quality, we have already discussed. Provision coverage ratio, we have also been very healthy at 98.10%. Next. Deposit YoY growth has been 7%, but if you see the quarter on quarter growth is 5%, and current account also quarter growth is 11.3%, YoY growth is 1.6%. Saving fund also we grown by 4.1% quarter on quarter, although it remained almost flat on YoY basis. CASA share we have been able to maintain at 40.17%. In advances also we grow. There is healthy growth in the last quarter of the financial year at 5.2%. However, on YoY basis, it was 10.2%. CD ratio we discussed at 79.79%. Overall business quarter on quarter growth was 5.1%. However, YoY it was 8.5%. Next. Within advances, overall RAM we have grown by 13.2%, wherein retail and agriculture we grow at almost 14% and MSME at 12%. Earlier our MSME growth used to be in the range of 5 to 6 to 7%. This time we have been able to show a growth of around 12% in MSME, and we will like to continue that the momentum what we have built. Next. I'm happy to share that Indian Bank is continuously maintaining the target of the priority sector. If you see priority against the target benchmark of 40%, we have achieved 44% in priority sector. In agriculture, against a benchmark of 18%, we have been able to maintain 19.55%. A small and marginal farmer against a benchmark of 10%, we have been able to maintain 12.46%. Weaker section also against a benchmark of 12%, we have been able to maintain at 14.54%. Micro under MSME against a benchmark of 7.5%, we are at 12.71%, and non-corporate farmers against a benchmark of 13.78%, we have been able to maintain at 18.10%. So continuously bank is maintaining the priority sector targets, which remains our focus area throughout the year. Self-help group, bank is pioneer in self-help group. We have got many awards in the self-help group from the NABARD also, and recently we have also concluded 2 camps, one in Trichy and one in Bhubaneswar. We have concluded. Bank remains pioneer in self-help group. A stand-up India target we have also achieved. It is at 118%. Mudra we have also achieved the target at 101%. Interest income has grown, as I told. Income because of the rate cut, there is subdued growth in the QoQ. YoY it is 8.04%. Interest expenses, because deposit rates have not come down, so there is QoQ growth is 1.3%, but YoY it is 10%. For year ended, interest income has grown by 11.5%. Interest expenses has grown by 13.9%. Net interest income, there has been marginal decline on QoQ basis. However, on YoY basis, we have grown by 8.2%. Non-interest income, bank has seen good growth in the non-interest income on QoQ basis and YoY basis also. Net interest income has grown by 27.5% from 2,150 to 2,743 crore, and YoY basis 21.2%. Operating income we have been able to maintain at YoY growth of 10.3%, and operating expenses we have been able to contain it at YoY basis of 3.5%. As a result, our operating profit has reached for the quarter 5,019 with a quarter to quarter growth of 5.7 and YoY growth of 16.6. However, if we talk of the yearly number, it is 16. It has grown from 16,840 to 18,998 with a growth of 12.8%. Provision excluding taxes has marginally come down because of our, as I discussed, our SMA book we have seen significant improvement in the SMA book. That's why there is marginal decline in the provision from 1,059 to 795, and and profit before tax. Profit before tax, if you see, we have grown by 38.2% YoY. However, annual number has grown by 35%. And net profit has also grown by 35% YoY. So net profit, and we have been able to achieve a net profit of 2,956. Next. Income, if I talk of the various segment of the income, we have seen consistent numbers throughout the segments. One or two point I will like to highlight. We have been able to recover good in the NPA book. If you see our NPA book recovery, which was last year 1,879, for the year, it has grown to 2,548 with a growth of 35.6%. Fee income has remained flat. I mean, with a YoY growth of only 6.9%. Forex income, yes, because there was a lot of volatility in the rupee dollar, so we have been able to earn some good profit in the forex income because of the volatility. On QoQ basis, if you see, it was 74 in the Q3, which has grown to 178 crore in the Q4. PSLC commission, since we have good agriculture and marginal or small farmer coverage, as I shown in the previous slide, against the benchmark we have higher, so we are selling some PSLC, and we have been able to earn the income of for the year 843. Similarly, miscellaneous income has grown quarter on quarter basis from 134 to 393, and for year 273 to 893. Next. Interest on deposit, which is consistently because demand is there, credit growth is there, deposit, so that's why demand for the deposit is there. So that has remained at elevated level of YoY growth of 12.1%. Borrowing, we have been able to raise some infrastructure bonds, around 10,000 crore of infrastructure bond we have raised. That's why interest on borrowing has gone up a little bit, but otherwise it is under control. Staff salary, employee benefit, we are giving as per the norms. So there is marginal, growth of 9.3% Q1Q basis and 14.54% on YoY basis. Staff expenses overall has increased from 2,407 QoQ basis, 2,417 to 2,700, and for the year it has increased from 9,265 to 9,883. Operating expenses, we have been able to, as I discussed earlier also, operating expenses we have been able to contain. Although it has increased from 3,818 to 4,113 with a YoY growth of 3.5%. However, for the year, this number has increased from 14,301 to 15,401 with a YoY growth of 7.1%. Next. These are the various ratios. We like to discuss 2-3 ratios here. Yield on cost of deposit, first of all, despite the deposit rate remain elevated because of the active function of the treasury, we have been able to contain cost of deposit from 5.18 to we have been able to bring it down to 5.10%. Our treasury is active, and they have played key role in this also. And we have also not gone for the raising of the major bulk deposit, which normally we get at a very high rate. Yield on advances, because of the repo rate cut, it has on QoQ basis, it has come down from 8.92 to 8.74. However, for year ended, it remained at 8.75. Then NIM, domestic NIM, it has come down, as I discussed earlier also, from 3.57 to 3.48, and for year ended from 3.54 to 3.451. Cost to income ratio, we have been able to maintain at around 45%. That is continuously we are maintaining around 45%. We have been able to maintain this cost to income ratio at 45.05% for the quarter, and for year ended it is at 44.77%. Return on asset and return on equity. These are the benchmark, which is one of the best among the public sector banks. Our return on asset is very healthy at 1.37%, although it has declined marginally, but that is cautious call we have taken. And return on overall for the year, it has remained to 1.32%. Return on equity, we have been able to maintain at 21.01%, and for year it was 20.76. Earning per share has increased from 84.70 to 87.78. However, for the year it is 81.06. Book value per share, it has grown from 412 to 423. However, if you see in the year, our book value has grown by almost 70 rupees. Business per employee has also grown YoY basis from 29.85 to 32.42. Business per branch has also increased from 205 to 222 rupees. Net profit per employee has also increased from 20.03 on yearly basis to 27.2. Next. The number we have already discussed. So if you see, our earning per share is continuously increasing. Cost of yield of cost of fund, we have also been able to maintain somehow. And return on net worth and return on equity, if you see the graph, it is continuously on the rising trend. Next. Bank is well capitalized. As I discussed earlier, we have a capital adequacy ratio of 17.94%, primarily because of the flow back of the profit. Here I will like to add one thing. Last year we have approval of capital, raising capital of 5,000 crore and 2,000 crore, but since our capital position was good, we didn't opt for raising capital because our capital adequacy ratio are good. If you see the credit risk weighted density has also come down from 61.95 in March to 60.37%. So we are taking making only quality advances we are making. Next. This is the shareholding pattern. Government is the largest shareholding with a holding of 73.84%. And this is our capital raise plan. We will see. We have board approval of 5,000 for the equity and a bond tier 1 or tier 2 bond of 2,000 crore. We will see at the appropriate time. If need be, we will take. Otherwise, if capital position is good, we will take call according to the market situation and the growth of the bank. During the last year, as I discussed earlier, we have been able to, why we have been able to maintain the cost of fund also, let me explain. Last year, we have raised the infrastructure bond of 10,000 crore. So that made our fund requirement. That's why we didn't go for the deposit raise, which is coming at a higher rate. Also, we have taken some refinance, which is also at the very competitive rate from CDB and other agencies. Because of that, our deposit requirement was made through these sources. Next. Asset quality, if you see if I talk of the gross and net NPA in absolute number, gross NPA is 18,179 and net NPA is 1,110, which is very, bank is in very safe position. That is what I can say. Provision coverage ratio also, if you see, 98.10%. And one good number, I will say, recovery for the quarter has been zero. Slippage for the quarter has continuously declining from, it has come down from in 23. It started in 21 at 2.80, then it come to 2.79. Then there was substantial decrease in FY23 at 1.75. Further, it came down to 1.49, and now it is on 1.11%. Next. This is the movement of NPA. During the year, fresh slippage was, during the quarter, fresh slippage was 1,431, and whereas which went into the movement of NPA, it was 4,061. Because of that, our gross NPA number has come down. But if you see the recovery number for the year, it was 8,714 total reduction, that is 8,714, whereas our slippage has always been under control. That's why our NPA numbers are coming down. Next. SMA, I already mentioned SMA of the, this is more than 5 crore, but I've talked of the entire book irrespective of the amount. That number has come down from 15.59% to 15.50%. SMA2, if I talk of the corporates, SMA2 number we have been able to maintain from 528, which was last year, again it is at 659. SMA 1, if you are seeing, it was earlier 1900, 1909, and it has gone up 4296 because of the two accounts of the some two large accounts are there, but that is under control. Uh, that account will not slip to NPA. Maybe they will come out of the SMA also. Next. We are happy already. Previous slide also we have shown whatever the parameters of the given by the government on the priority sector or agriculture or small and marginal, we have been able to maintain continuously that we have achieving the target. Here also, whatever target has been given under the social security schemes, we have been able to achieve all the targets. Maybe it is PMJJBY, PMSBY, or APY or PMJDY. We have been able to achieve the targets. So BC engagement, BC is a good source of business for all of us, and similarly the PMJDY account. We have increased our BC engagement. In the last year it was 11,297. Now it is 14,667. So around 3,500 we have added BC. BC is a good source of garnering business for the bank. If you see balance in PMJDY account also, last year it was 11,106 crore, now it is 12,223 crore. We are very mindful of the social security schemes driven by the government. We continuously achieve all these targets. Next. Digital transaction, I will add only 1 or 2 points thereafter my colleague Mr. Mahesh Bajaj will take over. Digital transaction, if you see, it is increasing from 90 to, it was FY24, it was 87%. Now it has gone to 92%. And if you talk of the quarter, it is at 93%. Continuously, we are focusing on the digital adoption. Our mobile transaction also has gone up. Internet transaction through internet banking has also gone up. And we have a very robust system of even loan people can take without going to the branch. That penetration has also, in very scheme wise he will explain, but that penetration is also what people need not to go to the branch for a smaller loans. Even Mudra, they cannot go to the, they need not to the branch. It will be sanctioned through the app, and ultimately for the address verification or for one or things they need to do.